to introduce differentiated products and meet diverse customer requirements. Nuvoco aims to build a safer, smarter, and sustainable world. With an array of products across cement, modern building materials, and ready-mix concrete, new is Nuvo Nirman. New is Nuvoco. Nuvo Nirman from Nuvoco is offering the flexibility of choice for varying construction requirements. New is Nuvo Choices. New is Nuvoco. Nuvo Nirman from Nuvoco is focusing on technology to create benchmarks with new generation products. New is Nuvo Technology. New is Nuvoco.
अच्छा घर वो होता है जहाँ बुनियाद को मजबूत बनाया जाता है, जहाँ अच्छाई की नींव तैयार की जाती है, भविष्य को जहाँ संवारा जाता है। अच्छे घर करे अच्छी सोच का निर्माण।
वो अच्छे घर बनते हैं सिर्फ कंक्रीटो से, जिसके 5 स्टार एडवांटेज से आपका घर बने सबसे अच्छा। कंक्रीटो, नींव अच्छाई की।
रोबू, ये है हमारे फैंटास्टिक फ्यूचर का घर। टिका रहेगा ना सालों साल। फ्यूचर रेडी घर की नई टेक्नोलॉजी मतलब
माइक्रोफाइबर युक्त ड्यूरागार्ड सीमेंट, जिसके हर बैग में है फाइबर से अतिरिक्त बांधने की क्षमता, ताकि आपको मिले फ्यूचर रेडी होम।
अरे डबल बुल सीमेंट के आगे सिंगल बुल क्या करेगा?
डबल बुल सीमेंट का डबल एडवांटेज, मजबूती उम्मीद से ज्यादा।
Nuvo Nirman from Nuvoco is focusing on innovation to introduce differentiated products and meet diverse customer requirements. New
Good evening, everyone. Speaking on behalf of Nuvoco Vistas Corporation Limited, I'm Lalit Jaising from Concept PR and your moderator for this virtual brokers and analyst event. I would take this opportunity to thank you for taking out your time to join us from your busy schedules. We appreciate your presence and extend a very warm welcome to all of you. The objective of today's live session is to understand Nuvoco Vistas Corporation's interest in raising finance by an initial public offering and what they do as a business organization. Under a normal circumstance, this would have been an on-ground event, but we all increasingly getting accustomed to this as a more safer and convenient format of attending and conducting the roadshow. We hope you gather the same or a better experience from the comfort of your home and office. Moving ahead, you will be kept on mute throughout the event and all questions will be answered via the Q&A chat box only. where you can type your question in session or at the end of the webinar. Would request all participants to please limit yourself to 3 questions if possible and use a lowercase font when typing the question. If we miss answering any of your questions, don't worry, you can email us at ipoteam@conceptpr.com and we will try to be swift in responding back to you. Going forward, it is our great pleasure to introduce the speakers of today. From the company, we have Mr. Hiren Patel, Chairman, Mr. Jayakumar Krishnaswamy, Managing Director, Ms. Madhumita Basu, the Chief Strategy and Marketing Officer, Mr. Manish Agarwal, the CFO. The representation from the book running lead managers are Mr. Deepak Nawal, Senior Vice President and Head Industrials and Building Materials, ICICI Securities Limited, Mr. Salil Pitle, Joint MD and Co-CEO, Axis Capital Limited, Mr. Amitabh Malhotra, MD and Head Investment Banking, India, HSBC Securities and Capital Markets, India Private Limited, Mr. Satish Arcot, Vice President, JP Morgan India Private Limited, Mr. Prateek Inwar, EVP and Head Investment Banking, SBI Capital Markets Limited. On behalf of the company and lead managers to the issue, let me thank all participants for being a part of this session. I now invite Mr. Salil Pitle from Axis Capital to deliver the opening remark and commence this brokers and analysts meet. Over to you, Salil.
Thank you, Lalit. Good afternoon, ladies and gentlemen. To connect with you all in this format. In this busy IPO season, I guess this format has become a lot more efficient and effective to do the broker and analyst meets. We at Axis Capital feel extremely privileged and honored to bring to you what is probably the largest IPO by a cement company in the capital markets history. It's IPO in the cement business, which the street is seeing probably after about 14 years. And we do believe that this will lay a very strong foundation for companies in this sector to tap the capital markets into the future. I'd just like to welcome the Nuvoco Vistas team, Mr. Hiren Patel, Chairman and Non-Executive Director, Jay, the MD, Manish, CFO, and Madhumita, and we wish them all the best as they embark on the IPO journey. What we see in Nuvoco Vistas today is a company which, in a very short span of time, precisely in about 7 years, is become India's 5th largest cement company. And mind you, in what is a very competitive market in India. They also become the largest cement company in East India in terms of capacity. I think this kind of stellar performance in a very short span of time is surely no doubt to the strong parentage and the able guidance of Dr. Karsanbhai Patel of the Nirma Group. And we do believe that the company is extremely well poised to move towards and further strengthen its market leadership in various markets in the years ahead. One of the things that the company has shown quite strongly is its ability to grow through acquisitions. This company acquired the cement business of Lafarge in 2016. Last year, they acquired the Imami cement business, Nuvoco Vistas, in 2020. And more importantly, it's been able to not only do the acquisitions, but also integrate them well into their setup and therefore further gain on the synergy benefits that come out of some of these acquisitions. As a result of these acquisitions, it's all, and so along with that, the organic growth, it's become the fastest growing cement company in terms of capacity additions in percentage terms, with installed capacity doubling very quickly over the last 5 years. So it's a phenomenal job done by the team. I'd just quickly like to introduce the IPO details. The IPO size is 5,000 crores at the upper end of the price band. It comprises of 1,500 crores of fresh issuance and a 3,500 crores of offer for sale by the promoters. The price band is 560 to 570 rupees per share. The issue opens on Monday, the 9th, and closes on Wednesday, the 11th, and of course gets preceded by an anchor book, which is scheduled on this Friday, the 6th. As we come into launching this transaction, we've done so on the back of very strong investor demand on the anchor book. Very good quality marquee investors are participating in this deal, which you will see on Friday. And it's clearly a testimony to the strong business model, the aggressive growth path that this company has chosen, and aspirations over the years ahead. Without taking further time, I would now request Jayakumar to walk you through what has been a really phenomenal journey of the company and what kind of future growth strategies they have.
Thank you, Mr. Pidle, for the introduction to Nuvoco Vistas Corporation's initial public offering and issues key highlights. I would now request the webinar team to please play a short curtain raiser by the company. Thank you. I would now like to call upon Mr. Amitabh Malhotra from HSBC Securities and Capital Markets to share a few words. Over to you, Amitabh.
Thank you, Lalit. A very good afternoon or evening to all of you present here. Once again, we would like to thank you for your time and support to this landmark IPO of Nuvoco Vistas, which is a much awaited issue in the sector where one is seeing an issuance of a primary nature after quite a while. As you all are aware, Nuvoco is the fifth largest cement company in India. And what also makes it stand out is that it's the largest cement company in terms of capacity in the region that it operates in, which is largely in the eastern region. And particularly of importance here is the eastern north region, where you will likely to see a fairly robust and secular growth pattern over a medium term, where Nuvoco's strong presence are already established in this market, and which is why it is set for a fairly attractive growth outlook. Now, the company obviously is backed by one of the most hands-on promoter in Hiranbai, and also supported very ably by a very credible management. And I say that on the basis of personal experience, having kind of seen that and having seen them in action. I think Nuvoco has demonstrated very strong execution capabilities, not only just from a point of view of building up plants, but also in terms of acquisition track record that it has. And it has significantly better operating metrics and growth numbers vis-a-vis its peers. We look forward to your positive coverage of the issue and obviously look forward to your able and strong support for this issuance. Thank you once again.
Thank you, Mr. Malhotra. I would now request the company team to take us through the organization's journey, its struggles, its victories, subsequently take the attendees through the company's investor presentation to cover its business and financial details, as well as touch upon its key strategies going forward. Over to you, Hiren Bhai, to take it forward and address the attendees on how Nuvoco has grown and is at what it is right now.
Thank you, Lalit. Ladies and gentlemen, let me first of all thank you for attending today's webinar. As you all know, Nuvoco is a part of Nirma Group companies, and the group has grown to a size of over $4 billion and has a business interest into consumer products, chemicals, healthcare, cement, and real estate. The journey of cement industry of the company is fairly new. First production that we started was in 2014 in state of Rajasthan. And after coming into production, we wanted to scale up the business and realize that greenfield facility takes a little time to scale up. We wanted to become a large cap, large size cement company. So we changed our strategy a bit. And at that time, Lafarge opportunity came in. So we bid for acquiring the company. Luckily, we happened to be winning in 2016. Lafarge came with a few excellent brands, and soon after acquiring, we were fully sold out in terms of capacities. We were not able to serve some of our retail customers. So we were in need of capacities, and that was the time where Imami opportunity came in. So we bid for Imami, and we ended up acquiring it in the middle of last year, which was June, which was middle of COVID as well. There were a lot of companies on sale, but we had bid for only 2 of them in last 5 years, and we have ended up acquiring both of them. So as a group, we are very selective of what we want, and we're very sure that what we want is available. So starting in 2014, the group had only 2 million ton of capacity. Today we are closing with almost 22 million plus capacities. This is an unprecedented growth that anyone has seen in the industry. 22 million ton companies have taken decades to build that capacities. Normally, people go to stock exchange first and raise fund and then create capacities. We have done it the other way around. And we have created not only a large capacities, but great soft assets as well. We call Nuvoco purely a branded cement company. As you all might be knowing, the company operates in two premium brands, namely Concreto and Duraguard. And with the acquisition of Imami, which is called New Vista now, we also own the fastest growing cement brand, which is Double Bull. We had 3 different operating team. One was the Nirma team, then the Lafarge team came on board, and at the end, the Imami team, which is a New Vista team, also came on board. So all 3 teams are still there. Majority of the employees are still working with the company. It's a separately managed company based out of Mumbai. Very well experienced team in the cement industry. Team has done all kind of strategies to bring company to this level, starting from M&A to greenfield facilities, creating brownfield facilities, debottlenecking, expansion plans. So all of those strategies have been pushed in last 6 years. A lot of hard work has gone to create this great company and a sizable company. Industry, as you all know, has been doing great. In last 5 years, it has been growing at more than 8% in terms of volume. And East is even growing at a faster rate. East per capita consumption is still lower, so it will keep on growing at faster rate than the country average. So we are rightly placed at right time and right location. What is another thing that is unique to this deal is that we are talking about an IPO of a company which is almost 22 million ton in capacity. If you look at all cement companies that are listed, there's a big difference between their profitability, the way investors' perceptions are. There's a difference between large cap and mid cap companies. So this is a large cap company coming with an IPO. If you see what is left on the block, there are no one is close with any capacities and not listed. So this is one of the unique opportunity to invest into an IPO of a large scale cement company. I don't think anything close is going to come in near future. This IPO itself is coming after 15 years. So one of the rare opportunities. I hope to see all of yours participation into it. Now I will leave it on to Jai to give more detail about the company's production facility, financials, etc. If you have any more questions, we'll be open to answering them after the presentations. Over to you, Jai.
Thank you, Hiren bhai. Good afternoon to all of you from the fraternity. I have in Mumbai, I've got a couple of my colleagues who will join me in this presentation. Let me begin by sharing with you the vision of our company. Our vision is to build a safe, smarter, and sustainable world. And all these three parameters are very close to our heart. Our operations are highest safety standards. Our products are really smarter, and our facilities focus on sustainability as a core agenda. Mission for us is to become a leading building materials company delivering superior performance. And from now on, as we develop our company further, we will really focus on building the company to greater heights in terms of performance on every single parameter. I'll just go back a little bit behind to explain to you our journey, picking up from what our chairman spoke. We started off with the 2.28 million ton capacity in Nimbol in Rajasthan, and then in a short span of 6 years, we have achieved a 10x growth. And this journey, we already become the leading cement player in East India and 5th largest in the country. And we're very proud of the growth our teams have been able to achieve in the last few years. We have a comprehensive product portfolio. 3 verticals we operate in: cement, modern building materials, and ready-mix concrete. In all these 3 verticals, we have sizable position in the market. The cement facilities are located in 11 sites across the country in East and North India. And in the East region, we have grinding units in each of the state, which is a unique competitive advantage for the company. Ready-mix, we are a national player with 49 units across the country. And modern building materials is a new business. We see a huge opportunity for the business to grow. And we currently do a third-party sourcing for this business. 3 unique brands, all of them came with the acquisition. As you know, our company is a brand-led company with huge focus on trade channel. Concreto and Duraguard, the flagship premium brands which came from the first acquisition, and they really hold a huge premium in the market. Double Bull came through the second acquisition last year. It is the fastest growing cement brand in the country, 0 to 5 million in a flat 5-year time period. So we've got strong brands, wonderful assets, and last but not the least, we've got a team of people who are energetic, competent, hugely experienced. Over 3,500 people work for our company. And with this combination of excellent facility, wonderful brand, top-class team, we hope to build this company much, much larger and bigger in the coming years. This is a very short introduction which I want to share with you. I will now request my colleague Madhumita to talk to you about the industry as well as the business fundamentals. I'll come and join you later about the company's strategy.
Good afternoon, ladies and gentlemen. As you are aware, the Indian cement industry has a very robust demand outlook. The demand is expected at a 6.5% CAGR over the coming 5 years, which is 2x the capacity addition expected at 3.5%. So capacity utilization is expected to grow upwards of 70%, providing a good, robust pricing environment. Demand is expected primarily from infrastructure investments and revival of the housing segment. Moving to the region-wise structure, as you are aware, we are number 1 by capacity in the eastern part of the country, a region in which demand has been growing at a 9 to 10% and expected to continue at an 8 to 9% growth. Demand is far outstripping the grinding unit addition, and more importantly, there is an acute shortage of clinker in this region, driving clinker capacity utilization to upwards of 90%. North region is another region which is seeing very good growth, and this is expected to double in the coming years on the back of very good infrastructure projects. This is another region in which capacity utilization is upwards of 80%. The region has seen good price improvement in the financial years 20 and 21, and the robust pricing environment is expected to continue. We also have some part of our business in central India, the region lying between north and east. This is another region which is seeing good demand growth and again a good outlook of capacity utilizations improving and a good pricing environment. From here, I will move to our business fundamentals and value drivers. On the operational front, three principal levers. We have very strong limestone reserves representing 30 years plus in plant life. We have secure long-term contracts for supply of slag, coal and fly ash. For slag, we have a contract with Tata Steel which meets a very large part of our requirement and gives us a 600 INR per ton pricing advantage over local slag sourcing. We are focused on power cost reduction. Captive power generation at 151 megawatts with CPP units across all our units. Our IUs are all equipped with waste heat recovery systems, and you will observe from the chart below that at a ratio of 2 of power capacity to installed cement capacity, we are one of the best in the industry. We also have plants in all the 6 states in the eastern part of the country. This gives us a very good landed cost advantage and significant logistics cost savings. We are a trade-centric business. We have a strong network of dealers, carrying and forwarding agents, and logistics partners who ensure good spread and demand for our products. At a 79% share of trade channel-driven business, we are significantly better than the rest of the industry. We have further an appetite to grow this trade business. Prior to the Imami acquisition, we were operating at a 95% capacity utilization in the east and were unable to meet the requirement of our trade channel. With the additional capacity, we are focused on growing the trade business in the eastern region. In the north, we have seen an opportunity to launch the Double Bull brand in the northern markets and are seeing a very robust increase in trade sales in the coming years. As mentioned before, infrastructure demand continues to be strong in the country. We intend to sustain a good, strong bulk and institutional business at roughly 15 to 18% of our sales mix. Moving on to our brands, we have 3 strong brand verticals. Double Bull is a brand we have got with the Imami acquisition. It's the fastest growing brand, 0 to 5 million in 4 years. This brand has got us a very strong volume base. The Double Bull brand comes with 2 premium variants, Shub and Master. With the Nuvoco association, we see opportunity to grow volumes and premium on these brands. Then there is the Duraguard brand and its value-added variants, a brand which operates in the premium space. And right at the top, we have our Concreto brand. Concreto brand determines the best price of cement in the market. The typical difference between an average B category brand and the Concreto brand is upwards of INR 50 per bag. With the acquisition, we are focused on driving growth in our premium product portfolio. On the ready-mix side, we have a similar brand architecture. Concreto represents the high-end, high-performance range of concretes. We have specialty concrete products like Artistay, which is decorative concrete, and Instamix, which is concrete in 35 kg consumer packs. On the modern building material side, We have a DIY ready-to-use range in Instamix. These products are preparing us for the changing face of the consumer industry. On the R&D side, we were the organization that pioneered additive-based cement. So whether it is addition of microfiber in 50 kg pack of cement or water-repellent additives, a product for which we have a patent, this R&D center remains focused on driving consumer value at the point of consumption. It is like having fluoride in your toothpaste. We have another interesting product in Instamix Microne, which is a wet, ready-mix 35 kg consumer pack for repair jobs. The New Vista acquisition provides us opportunity to drive significant synergy benefits across the 4 verticals. On the revenue side, prior to the acquisition, because of our very high capacity utilization, we were unable to extend our range. With the acquisition, we have been able to make an entry with a premium product, Duraguard Silver, in the composite cement category. This opens up a new segment for us, and we have plans to drive growth and our presence in this segment. On the multi-price point strategy, I shared with you our strategy to grow the premium products in the eastern part of the country with the incoming additional volumes. We have also launched the Double Bull brand in the northern markets to grow our trade presence in the northern market. On the operational efficiency, with the acquisition of the New Vista assets, we have stayed focused on developing cross-selling capabilities across all the plants. So with the ability to source all our products and all our brands across 6 states in the eastern part of the country, we have a significant advantage of reducing the landed cost to the endpoint. On clinker side, we have a cluster of 3 units in the state of Chhattisgarh. One of the units does not have rail connectivity. So we are moving clinker from this plant to a nearby plant at 20 kilometers and connecting by rail to all our grinding units. Ability to shift from road transportation to rail transportation over a 600 kilometer distance is again bringing us significant logistics cost benefit. On the sourcing, with the addition of a huge capacity of 7 million tons of cement, you will appreciate that scale benefits have already started coming in, particularly in common procurement of raw material, fuel, and services. We enjoy fiscal benefits in incentive benefits in plants across 3 of our states. In the state of Jharkhand, in our Jojobera plant, we have just invested an expanded capacity of 1.5 million tons. We have ongoing fiscal incentive schemes in the incoming plants of Bihar and West Bengal. We are focused on increasing the supply and throughput from these plants to bring in the fiscal benefit upfront. The states of Jharkhand, Bihar, and West Bengal also have very good realization per ton, giving us a win-win solution in the space. With this, I will hand over to Jay for a quick update on our strategy.
Thank you. Let me just take you through the business strategy for the coming years. So I will be muted on numbers because of the close period. However, I will try my best to explain to you all the strategy of the company. Let's talk about the first business strategy of the company, which is about growing revenue for the company. As I said before, we are the leading company in East India and 5th largest in the country. We've got positions in East and North. Our endeavor will be to maintain our position in East and also grow the northern markets. To get this kind of growth, we have embarked on 2 major capacity debottlenecking. One is to get the grinding capacity going by about 2.7 million tons. Already we have 22.32 million tons, which our chairman said. And this 2.7 will take the company to 25 million tons in the near future. Out of this 2.7 million tons, 1.5 million tons is already commissioned as we speak. It's on stream in the Jamshedpur facility of our company. To support this kind of growth, we are also getting clinker debottlenecking done in 3 of the plants, 1 in Rajasthan and 2 in Chhattisgarh. And with this kind of clinker as well as grinding capacity, we will continue to grow in the coming years. Post 24 months of this, we plan to expand our business into Center and Western India. And to get this kind of growth in the markets in Central and Western India, we are planning to set up a greenfield facility with our research in our company. We are already present in Center and West, but these markets are currently fed from our northern units and eastern units, and we want to kind of be a large player in this category and hence the expansion plans for the company. On the other two verticals of ready mix and modern building materials, like the cement industry, which is slated to grow at 8-9% in the next 5-year CAGR period, these two verticals are also slated to grow at double digit in the coming years. We have strong plans to grow our ready mix business as well as the modern building materials. To get this kind of growth, we would invest heavily behind our brands, Concreto, Euroguard, and Double Bull. So that should fuel the growth for this company in the coming years. Moving on to the profitability growth levers for the company, built on 3 pillars. One is to improve operational efficiency. Our company continuously focuses on increasing the efficiency in the plants in terms of specific power, specific fuel, and rest of all the costs. And with the implementation of WHR and CPP, our power cost is slated to reduce by a good amount in the coming years. The second big lever for us is the pricing acceleration program. With the acquisition of the Emami cement business last year, we now have grinding units in every state, and we have the opportunity to increase our premium share in each of the key states in East, focus on Concreto, Shub, Master, and the variants, and increase the realization as well as the Ebitda for the company. Third important lever is to successfully integrate the Nuvoco Vistas business. As we said, this business was acquired during COVID times. In a record 9-month period, we integrated the company successfully. Some of the unlocking has already happened in the last few months, and in the next 12 months, a large amount of unlocking is going to happen with the combination of these two entities. That would mean all the agenda which my colleague spoke a little while earlier, and increase the EBITDA for this company by a sizable amount in the coming years. Water and waste, our commitment to reduce the carbon footprint starts from product development all the way to process development, as well as use of fuel which is a byproduct of certain other industries. Our target is to reduce the carbon footprint by 2% year-on-year, water consumption 5% year-on-year, increase alternate fuel to about 6% from the current levels. One of our plants in North India is industry benchmark in use of alternate fuels. Last but not the least, in the plants where we don't have either CPP or a WHR, we are setting up renewable energy through solar power. One plant was implemented last year. The balance 3 will happen in the next 12 to 15 months. And lastly, we've got a strong set of people, and we are able to integrate the cultures of the Nirmax business, the Lafarge business, and the Emami Cements business, and we have created a company which prides on capability of people going forward. This, in short, is the plans for the company going forward. All these gets translated into financial numbers. I will now ask my colleague Manish to talk to you about the numbers which come out of these plans.
Good evening, ladies and gentlemen. We have a consistent track record of running our plants at more than 90%, and in the eastern region, our plants have been running at more than 95% capacity utilization. We have always been in a consistent growth trajectory, and this is clearly visible with the merger of the cement division of Nirma and also the acquisition of Nuvoco Vistas, erstwhile Emami Cement. And this is going to help us further improve on our growth journey in the markets of North, East, and Center. In Q1 of last year, which was impacted because of the COVID, despite that, we were able to clock volumes of 17 million tons in FY21. And in the H2 of FY21, we did 10.4 million tons at a capacity utilization of 93%. In terms of our revenues, we clocked 8,100 crores in FY21, and this is 9% CAGR over the last 2 years. So basically, if we look at on the volume side, through the organic and the inorganic route, our overall volumes increased by 15%, and also revenue increased by 9% because of the volume growth. Moving on to the overall EBITDA margins. So in FY21, we clocked 20% EBITDA margin, and this has improved over the years on account of the major 2 reasons. One is the power savings coming from the setting up of the CPPs and the waste recoveries. And as we are able to increase our volumes, we are going to improve, we are going to get more margins and profitability because of that. Secondly, we got the benefit on account of the Nimble merger, and this helps us to improve our synergy in the North operations. In terms of our Ebitda per ton, last year we did 975 rupees per ton, And because of the various internal levers and the strategic initiatives that was talked about in the presentation, we are going to see improved margins, further improve in our whole Ebitda pattern, as well as the absolute EBITDA. Moving on to the debt side, so with the strong cash flows getting generated on account of the robust profitability, coupled with this IPO proceeds, we are going to be repaying and prepaying some of our debt. And this is going to further help us improve our capital structure and also give us the flexibility to fund our next level of growth. On the CapEx side, this financial year, we are going to be spending around 527 crores. And this will be done primarily on debottlenecking of 3 integrated plants, kilns over there, the 2 in the eastern region and 1 in the northern region, and also undertaking routine and maintenance CapEx. So with this financials, I would request Jay to just sum up the key messages of the entire presentation.
Thank you very much. I think I just want to kind of leave the following messages to all the participants. We come from the cement sector, which is slated to grow, and it's a strong sector as we embark on the national building agenda post the COVID times. And we come from the eastern region where we are the market leader, and that's the fastest growing region in the country. We've got strong brands, Concreto, Duragard, and Double Bull, and all this portfolio helps us to grow in this region. And moving on to the plants, we have 11 manufacturing facilities in this region as well as ready mix across the country. Significant value synergies unlocking from the New Vista combination in the coming 12 months, slated to improve the profitability of the company by a sizable number. And last but not the least, wonderful lot of people and a strong focus on ESG agenda. With this, we wrap up our presentation. I hand over the mic to Lalit to take us to the next session. Over to you, Lalit.
Thank you for taking us through the presentation, Hiren Bhai, Jai Sir, Madhumita ji. We hope the attendees have captured enough and more understanding of Nuvoco Vistas business model, financials, its execution and other diversification opportunities at hand. Before the floor is open to the participants to ask their questions, I would like to reiterate to type your name and organization details in the Q&A chat box for the moderator to take note and address your query. Note, in the interest of time, we will be restricting to 15 to 20 questions only, and repetitive questions will be skipped. Sir, quite a few questions coming in with respect to profitability, business performance. Could you just throw some light on the performance of the company last year?
Yeah, last year was a unique year with COVID impacting us in Q1. As the entire country went on a sudden lockdown, it impacted the industry. But the pent-up demand came up in Q2 and then on in H2 of last year. The entire industry really grew well, and Nuvoco as a company, combined entity, grew handsome in the H2 of last year. We could do about 10.4 million tons of cement in H2, which was close to about 95% of the capacity utilization. We went back to our earlier levels in H2 of last year. And this year, we are on close period in Q1. We have not declared our results, but I think the Q1 continues to be much better than last year. One of the 2 points I just also want to share with all of you is, last year was unique because of COVID. Second, we acquired Emami during the COVID times and we had to fund the acquisition, successfully integrated. But Emami came along with a lot of one-time costs, some financing charges, as well as the structure of their business. And that kind of impacted the overall profitability in H1. However, in H2, post-integration, we successfully improved the performance of the combined entity, and the company entered into a PAT positive in H2 of last year itself. And we will continue to perform in similar lines going forward.
Thank you, sir. There are questions with respect to your current greenfield and brownfield capex that you're doing for Jojobera and Bahuba. Could you throw some light, on that with, with respect to the costs and, how much MTPA will it increase besides other points, which I will reiterate in the question next.
Jojobera, we are expanding capacity by about 1.5 million ton, and that is about to come in production. In fact, production trial runs have already started. That's in state of Jharkhand next to Tata Steel plant, so a great benefit of slag sourcing as well. That is almost over. We're looking at one expansion at Bahua in Bihar, which is a New Vista asset, which was in erstwhile Emami. So that expansion will also be going very soon. The expansion at Jamshedpur that we have just closed has costed around 500 crore rupees. We have two more power plants coming online, one in August and one in September. Both of them are in the older Lafarge assets. One in RS Mehta in Chhattisgarh and one in Jamshedpur. So that should come online this.
Thank you, sir.
This
a question which asks that do we have any capex planned for the south and any timelines with respect to that?
There are no plans in south in medium terms. We are a large scale company, but not large enough that we have to be there everywhere. So if I have to prioritize our investments going forward, we would not do it south in medium term. So first focus would be west and north. So that's what future plan looks like.
Okay, sir. Moving to the next question. Current debt and how much will the company reduce from the IPO proceeds?
Current level of debt is around 6,800 or some crore rupees as on date. We have 1,500 crore of primary. Most of it will go to repay debt. Post IPO 18-20 months down the road, we are looking at 1.2 EBITDA multiple of level of borrowing. That is very, very low for any commodity businesses. And from there on, we would rather kick in expansion plans than focus on reducing. I think growth is more important. So that is how the plans are.
So from a EBITDA per ton perspective in FY21, what has it been?
From FY21 till now, as I spoke a little while earlier, the first thing which is big time shift has been the build-up of volume and the rebound of the industry as well as the category. And as a company with a combination of Nuvoco Vistas and Nuvoco, we have reached a 95% capacity utilization in H2, which means we have full utilization and the volume benefit will kick in FY22. The second important thing is, during the presentation, we spoke about the levers of revenue levers of range extension, getting new products going, the profitability levers of getting logistics synergy, fiscal benefit, semi-finished movement, scale benefit coming from procurement, and all these levers are slated to give substantial savings. And internally, we are working on a target of improving the EBITDA of the company by close to 20% from last year's actuals.
Thank you, sir. Moving to the next question, how is the modern building material space coming out for the company? Could you throw some light on that?
Yeah, before talking about modern building materials, I just want to spend a couple of sentences describing the channel. As you would know, the cement channel, we are a trade-centric company, and with the channel of over 16,000 retailers working for us, most of this or majority of this channel partners also deal with other building materials. So we identified an opportunity 3 to 4 years ago where our primary aim was to find a way to increase the profitability of a channel, plus also identify products which are sold in the same channel. That's how we identified construction chemicals, a key building material additive, which is sold in the same channel as we are operating, and that's how we launched modern building materials. But over a period of time, we also realized there are other categories, wall putty, cover block, tile adhesive, Instamix, wet concrete. All these things have been identified by our wonderful lab in Mumbai, where we are industry benchmark in terms of identifying, launching new products. With this kind of opportunity of new products and combination in the same channel, we see this business growing into a large size in the coming years. Right now, it is not that big, but we see an opportunity to grow this business multi-fold in the next coming years.
So from a limestone reserves perspective, there's a question which asks that how many limestone mines do we currently operate? And, in terms of proximity, are they close to our plants or...
All the limestone mines are next to the plant itself. Normally, cement plants sit on the limestone reserves only. All the current operating clinker capacities have limestone reserves excuse me, of more than 30 years, with the one exception of one cement line, which is about 10 years of reserves left. There are a lot of mining coming on auction in that line as well. So well covered for limestone reserves.
Thank you, sir. We've been a predominant B2B company, and of course, we are going B2C now. In terms of a ratio going forward, where do you see this going?
Well, it's already a B2C company. Our current trade, our trade market overall is about 80% of the company's volume. So it's very branded sales already, not much of institution sales. And we still want to go up. Our overall as a company, we are 80% retail, but in North it is about 70%. So the next plan is to do more retail in Northern territories as well. And for that, we'll be launching Double Bull. We just launched a Double Bull brand as well as a new network for retail in North.
Thank you, sir. Moving to the next question. What are the current capacity utilization levels of the Nuvoco cement plants?
Yeah. We'll have to look at it in two parts. One is prior to acquisition of New Vista and then post acquisition of New Vista. Prior to acquisition of New Vista, Nuvoco Vistas has always been operating at a capacity utilization of over 90%. And the main reason for bidding for Emami was to get additional capacity for the company. And we got an additional 8.3 million tons through the acquisition. With the acquisition coming, and also COVID happened. So the first quarter post acquisition and then on the capacity utilization was a little bit less. But as we spoke a little while earlier, H2 of last year, we did 10.4 million tons, and Q4 of last year, the entire capacity was sold out. So going forward, we will continue to be operating at a capacity utilization excess of 85 to 90%, while we are continuously debottlenecking through the clinker line debottlenecking as well as the cement lines coming in Jamshedpur and Babua. So we are going to continuously create headroom, but in the short term, our capacity utilization will go back to 90%, but over a period of 12 to 18 months, more capacities will come to support the growth ambitions for the company.
So there's a question which asks, what is the current status of the Jojobera expansion?
Jojobera expansion is completed. It is in the final stages of commissioning. In fact, trial production has already happened. We have secured the government approval clearance for everything. Cement production is already rolling out of the VRM as well as one of the 3 packing lines we are setting up. As we speak, that should be completed. The one thing which will be completed in the month of August, September is the captive power plant. And by September 30th, the captive power plant, wagon tippler, rake loading, as well as the entire plant will be complete in full respect.
Thank you, sir. Moving to the next question, which states that, in terms of operating metrics, we are strong in terms of margins, but on a debt reduction standpoint, post IPO, how are we looking to, reduce the debt?
As I said earlier, post IPO will be about 1.8 EBITDA multiple FY22 end and less than 1.2 EBITDA multiple end of FY23. That is very, very low level of debt for capex based industry like cement.
Thank you, sir. Moving to the next question, what kind of advantage one gets in freight when it comes to captive railway slidings in terms of cost?
Okay, if you like, during the presentation, we mentioned about moving clinker from a non-railway siding to a railway siding site. So I'll just give you a practical example. The acquired plant of Emami, the Risda site, does not have a railhead. And before acquisition, that company was moving clinker from the plant into a different railway siding about 30 odd kilometers away, and then further moving it to rest of the grinding units. All of us know Chhattisgarh is a cement limestone belt, and to sell in the entire region, you got to source clinker in Chhattisgarh and move to other states where grinding units are set up. The moment we combine both the entities, our Sonadi facility just 20 kilometers away from the Risda facility, we immediately started rerouting all the clinker made in Risda to Sonadi site and then on reroute further to Bihar, Bengal and Orissa. Just a case in point, this rerouting itself is targeted to give us close to 20 crore rupees absolute improvement in cost numbers in the synergy, in the combination of both the companies. And a lot of it has started flowing. That's the kind of benefit one gets by having a railhead inside the plant.
Right, sir. Thank you. Moving to the next question, what is the percentage of...
in the cement side, we call it the premium products. So all the products like Concreto or Duraguard Multifiber or Concreto Green or waterproofing product which we have in the cement, all of them are very highly placed in our company, or the Shubh and the Master which comes from the Double Bull range. Nuvoco, before acquisition, with these products, our percentage of premium products was 35%. And with a combination of Nuvoco as well as Nuvista, the premium product combination with the overall expanded volume is close to about 25%. And our target in the coming 2 years is to increase this by close to 5%. That's on the cement side. And on the modern building materials as well as the ready-mix side, we have niche products called Artist A or Instamix. These are products which is constitute about 1/4 or 25% of the overall volume comes out of value add.
So which product has been the pride of the pack as of now? And in terms of what kind of response have you seen for 0M and Instamix?
I think it's very popular product. We are the first ones to kind of get such a unique offering in the market. As you know that when you do a very small job of patchwork inside a house, a small, you're able to get 5 kg bags. You don't have to kind of spend so much money to get. Of course, it is a unique format where you have to find a way to master the distribution model. But I think as a cement company, which our strong point is distribution, so we're able to get distribution going. And lastly, with the channel-focused approach of our company, these products are marketed through the cement channel, and there is a good pull for these products.
So what has been our average cost of borrowing over the last 3 fiscals?
It should be around between 7.5% to 8%. I wouldn't have exact figures. We can get you exact, but it should be in that range.
Thank you, sir. Moving to the next question, what has the sale volume number been for FY21?
FY21 in the cement side, we did about 17.3 million tons with the combined entity. In the modern building materials, we sold close to about 40 crores worth of revenue. Ready-mix is an outlier here. I won't look at FY21 as a number because the entire nation went into a lockdown. However, I'll give a benchmark number for FY20 where we did close to about 850 crores on the ready-mix side.
Thank you, sir. From a company benefit standpoint, sir, what are the incentives and subsidies that do you currently avail?
Yeah. So if you see many of these states like Rajasthan, Jharkhand, Chhattisgarh, Bihar, West Bengal, the state governments offer fiscal benefits, GST exemption to attract investment and employment in the states. So in the pre-Imami days, we had incentive, we enjoyed incentive in the state of Rajasthan for both the plants which we have. And once the combination of Imami as well as Nuvoco happened, we now have fiscal benefits in the state of Jharkhand with 1.5 million tons kicking in now. The Bagua site of Nuvista also has fiscal benefit, and also the Panagarh site. With this combination of the Nuvoco fiscal benefit site and the incoming company's fiscal benefit, we are looking at close to 60 to 65 rupees per ton of fiscal benefit accruing for the company.
Thank you, sir. From a dealer perspective, you've got 10,000 plus dealers and you run dealer loyalty programs. Could you throw some light there on this?
I will ask my colleague Madhumita to explain to you in detail the dealer loyalty program.
So firstly, we have a 16,000 plus network. We run 3 loyalty programs. One is with our direct dealer channel members, which is called the My3. This is a web-based portal where dealers connect and they get instant information about their incentive earnings. They also get an opportunity to participate in a lot of events we do to build a bond in the cement dealer fraternity. Apart from this, we have another program called Milan, which is a platform that connects us to the sub-dealers or the retailers to whom our dealers sell. This again is on a similar format. We have competitions, events, as well as normal incentive programs. And it's a good platform to connect with a spread out retail network across many states in the country. We also have a program called Riddhi with our influencers. Influencers are a very strong community recommending use of your brand and product, particularly in individual home building construction. We have a 10,000 plus relationship accounts with influencers across various states.
Thank you, ma'am. Moving to the next question. Just a minute. Do you have any plan for non-operational limestone mines?
There are some non-operational limestone mines, and they are normally there with all big companies. So all the expansion plans going forward will be based on these mines.
Right, sir. Moving to the next question, could you help us with the one-time expense on the integration of Imami with the company?
So one-time expenses came through financing cost, refinancing of some of the loans of Imami, as well as the cost of acquisition. Imami had one-time cost. So those were the 2 or 3 one-time costs which came, which kind of got booked in FY21. Will go away going forward. One was revaluation of the assets. Second one was the consultation charges that company paid during the acquisition phase. All these have gone away during the fiscal.
Thank you, sir. The next question being keeping sustainability in mind, what are the things the companies have done from a sustainability point of view? And adding to that, does the company have plans to enter the green cement business that is produced utilizing the sludge and other waste materials, and will provide a new direction for the construction businesses going forward?
I will talk about the sustainability as well as what we as a company have been doing. First of all, I think we are very proud of our heritage, and the company's DNA always has been to focus on sustainability. I spoke about the vision for the company to build a safe, smarter and sustainable world. So which means that all our activities in the company are focused on sustainability, smarter products, as well as safer work environment for the employees, as well as for the surrounding areas where we operate in. So to start with, the first thing is about reducing the carbon footprint. Here it is addressed on a multiple way. Our product portfolio consists of huge amount of cementitious usage in terms of fly ash as well as slag. We are one of the top companies in the country which has a very least amount of OPC, and most of the cement which we sell in the market is PPC as well as slag cement, which itself is a huge commitment to the sustainability agenda, reducing the carbon footprint. The second thing which the company took in the last 2-3 years is to set up captive power plants and waste heat recovery systems. Every single kiln in the company has a waste heat recovery system, which means the high temperature which comes out of the kiln is used to generate electricity, and that's economically useful as well as less polluting the environment. All our mines have got wonderful mine closure plans. Most of the mines have water bodies, and we improve the environment in the plant where we operate in. Huge amount of work happens in all our plants to set up green area, and tree plantation is a very big target for all the operating managers. By doing all these things, we have a strong target for reducing carbon footprint 2% year on year, water consumption 5% year on year, and lastly, use of alternate fuel in all our kilns with a target for the company managers to achieve a number of 6% of the overall fuel to be from use of alternate fuel. And I also spoke a little while about in the plants where we don't have WHR and CPP, we have solar plants, and going forward, 3 more plants will also have solar facility. That's the kind of agenda and focus the company has towards.
Thank you, sir. Moving to the next question, what is the current clinker conversion ratio and blended cement percentage?
Yeah, we'll have to look at it 2 ways. The 2 parts, I will say. The first one is prior to acquisition of Nuvista. Nuvoco operated in the east at a CK ratio of over 2.1. In north, the CK ratio is about 1.5. Now with the combination of Nuvista, North and Nuvoco, our CK ratio is 1.7, which is much more than the industry average of 1.4. And in the next 12 to 24 months, Our focus is to get the composite cement going, which is already launched, moving from non-trade to trade in North, where we'll move from OPC to more of PPC cement through the double bull launch, and we'll go back to the CK ratio of excess of 1.9 in the next 18 to 24 months.
So post the capacity expansion getting completed, what is our total utilization limit going to be?
With 22.32 million tons, which is on million tons as a full year, but second half of last year we did 10.4. You simply kind of, because of COVID, the H1 numbers are not that great, but if you extrapolate the H1 with H2, discounting the monsoon issue, sell much more than 17.3 and at 22.32, is going to grow at 6 to 8%. With 85 million tons sale in East and about 8 to 9% of market growth, we're looking at the industry itself growing at about 9 million tons every year going forward in the next 2 to 3 years. So very sure for us to utilize the entire new capacity which comes in, and in the next 1 to 2 years, again, we'll increase the capacity utilization to close to 90% with the demand as well as the focus of the company.
The question which asks on your working capital cycle, could you throw some light on that, please?
Manish, you would like to take this question?
Yeah. So basically, if you look at over here, in terms of receivables, so our trade receivables are on an average 10 to 12 days. So as what was talked about, it is primarily trade, non-trade. We have very low portion of our overall volumes, so 10 to 12 days on the trade side. Inventory is also on a case-to-case basis, so it is on 30 days, 35 days. And on payables also, it is again depending upon the product and the raw material, it varies from like 15 to 20 days. So from that angle, I think we are, in terms of working capital, it's pretty well managed.
Thank you. Predominantly, we've grown through the inorganic route. Is that going to be a focus area going forward?
We have done 2 major acquisitions, but if you look at how we have scaled up our capacity, the team also has done a lot of greenfield and brownfield projects on their own. M&A still is our focus area, but we don't see many great options coming in medium term. So for medium term, I think the focus would be more on greenfield expansion. But if anything comes up, we'll be definitely.
Moving to the next question, which asks that what are the synergy benefits that is going to be after the full integration of the Emami plants? Could you give some indication and points there, please?
Okay, we spoke about the focus area of integration, which was on 4 buckets. One is the revenue side integration. The second one is logistics side integration. The third one is purchasing side integration. And the fourth one is capitalizing on the fiscal benefits. On the revenue side, we spoke about launch of composite cement, getting more premium going in all the states because of the additional grinding units. This alone, we are targeting excess of 50-70 rupees per ton improvement in realization. And on the logistics side, where with the grinding units in each of the state, our optimizer has shown us that the primary lead distance will reduce by 50 kilometers. So that is going to give us a second bucket of saving. Third bucket of savings is the rerouting of the clinker of Risda from Sonadi. I spoke about the 20 crore opportunity which is there. So that should be the third lever. The fourth one is combination of procurement department of both the companies with the 7 million tons additional capacity coming in. Coal procurement, services contract, fuel procurement, rest of all the procurement gives us a huge scale advantage. Here we have kept a target of at least getting about 30 to 50 crore kind of savings. I won't be able to say how quick it will happen, but that's the kind of synergies every company can get when you combine the sourcing model. The last one is the fiscal benefits. I already spoke to you about the fiscal benefits in Rajasthan, Jharkhand, Bihar and Bengal. This is slated to give us close to about incremental 25 rupees per ton over and above the existing fiscal benefits. All these things, if I can't put a number because we are on close period, but certainly I can leave a number to you. Our target is in Q1 of this year as well as Q4 of last year, the EBITDA for the company came very close to the industry peers in the East region. That's something which happened due to pricing correction in the market, but a lot of things has happened due to the synergy benefits unlocking from the combination of both the companies. As our chairman said, the full unlocking of synergy benefits will happen in the next 12 months, and our target is to improve the EBITDA by at least 20% over last year's actuals in the coming 12 to 15 months through synergy benefits.
Thank you, sir. Could you indicate on what plans the company has plant-wise from a debottlenecking point of view?
Plant-wise, we spoke about. So first one, let me just explain to you. Clinker bottlenecking, we spoke about 0.9 million tons. That is going to happen in 3 of our facilities. One in the Nimbol facility in North. Second one is the Risda facility. And the third one will be the Sonadi facility. That's where we're going to debottleneck our clinker. On the cement side, in Jojobara, we have debottlenecked by 1.5 million tons, and Babua will have brownfield expansion by about 1.2. So these are all the debottlenecking by each of the site. We spoke about 527 crore capex that will be spent to debottleneck these sites this year and a little bit next year. And in addition to that, the factories have operational agenda to ongoing exercise productivity improvement, but the big projects are going to be clinker debottlenecking and grinding debottlenecking. 0.9 million tons clinker, 2.5 million tons of cement.
From an expansion point of view, there's one question which asks that, is the company going to look at export as a focus too?
No.
Okay, sir. Moving to the next question. There's a question which asks that considering that, cost of raw materials like petcoke, coal, diesels have increased considerably, besides moving into other alternatives, as you stated in solar, from a solar point of view, how is the company managing these increased costs? Are we able to pass it on, to the customers effectively?
In general, with a little bit of lag, the industry has the ability to pass on the costs, which all of our company has been doing. In fact, price increase happened in the month of March and it's holding on in East, and we have been able to pass on some of the price increase. But I think the more important thing is the focus of the company to offset the cost increase of raw materials like fuel and petcoke, coal and all. Here, all our kilns have the ability to process multiple fuels. Few years ago, when petcoke was cheap, so we moved from regular coal to a combination of coal to petcoke. But right now, petcoke prices have gone through the roof. So our teams have the ability to change the fuel mix based on the cost of fuel. And we are now operated 70-30, 65-35, 60-40. And the teams have the ability to get the right quality of cement, compensating for the cost of fuel. And we have been successful in the past, and I think in the current scene where the cost of fuel is very high, the teams are working hard to get the efficiencies going in the plant.
Thank you, sir. So you have a robotic laboratory at the Vistas cement plant. What does it take care of? Is it quality assurance or other things?
Yeah. So if you see the assets which we acquired through Emami are state-of-the-art assets. So first of all, the lines which came to us from Emami came with the best European technology and American branded machinery. So we're very proud with the quality of assets which we got through this acquisition. In the Risda plant, we have robotics to kind of do quality assurance. So if you really look at how does it work, so when you have a cement industry, you have to continuously check the limestone quality, which is the mines can be a little bit far, the crusher could be a little bit far away from where the production is happening. So the facility in Risda has this robotics where samples come through a mechanized route and the robotics do a non-touch operation of assessing the quality of clinker and giving feedback back to the control room to tweak the process parameters. So that's something which all the latest companies have, and by virtue of the acquisition, we have this in our site, and it is really helping control, maintain, and monitor the product quality.
Thank you, sir. That's interesting. Considering that we've responded back to majority of the questions, and if anything is unanswered, we will definitely reach out to the individual. Thank you, everyone, for showing more interest in knowing more about the company, its leadership and future potential. I would now like to call upon Mr. Pratik Indwar from SBI Capital Markets to make the closing speech before we end today's webinar. Over to you, Pratik.
Thank you, Lalit. On behalf of Nuvoco Vistas, SBI Capital Markets and other BRLMs, I express our gratitude to you for attending this meet today. As you can see, this is a very unique proposition coming out in the IPO markets. It's India's fifth largest cement company and the largest cement company in the high growth East market. I mean, how many times do we get a IPO of this scale and this size of a company? Large company, premium brands, flagship brands. It's a price leader in its market. It's fast growing. It's located in the fast growth market. Financials are already very solid. Strong product base. And above all, behind all of that is you have seen today a very high quality, a very committed, very hands-on, and very capable management team. I mean, this is a very, very strong combination of positives in favor of this company coming out today. So before I close, I just want to highlight and summarize the issue details. The offer opens on Monday, August 9th. It closes on Wednesday, August 11th. The anchor investor bidding date opens on Friday, August 6th. The price band is 560 rupees to 570 rupees per share, face value of rupees 10. The issue size is up to 5,000 crores, out of which 1,500 crores is a fresh issue and 3,500 crores is an offer for sale. The minimum bid lot is 26 equity shares and multiples of 26 equity shares thereafter. Very strong company coming out in the IPO. We request all of you to look at it carefully. We don't get IPOs like this all that often. On behalf of the company and the BRLMs, I thank you once again and look forward to your wholehearted support for this issue. Have a terrific day.
Thank you, Mr. Indwar. Esteemed audience, we've come to the end of the webinar. We look forward to your participation and support in making this initial public offering a great success. Wishing you all a great day and keep safe.
Thank you.
Thank you.